Hello, I'm Mark Abssy, Head of Indexing at Tematica Research, and welcome to the week ahead. So, basically, since the election, everybody's been kind of going bananas. There's been a lot of euphoria in the markets about all the great things that Trump is going to do, and some of that has started to wear off a little as his cabinet positions are starting to be known. Particularly this week, his decision or intent to appoint RFK Jr. To head up the FDA, and depending on who you're listening to, it's either head up or completely dismantle. Um, Understandably, healthcare has been off. This week, they were off about 5.5%. Um, in the energy side, depending on what you're looking at, if it's petrochemicals, i.e., oil, then those prices are starting to come down for two reasons. One, because there's anticipation that the Trump administration will have a meaningful impact to resolving tensions in the Middle East. The other is that, although we haven't heard the phrase in a while, it seems like we may be going back to the days of drill, baby, drill. And there are expectations from the International Energy Commission that U.S. production is going to be ramping up in the next couple of years. So, on the one hand, yes, it's good, I guess, because more jobs here, more energy production for energy investors. Of course, that means lower crude prices and, of course, lower profits. On the other side of the energy, coin, when we talk about renewables, there's kind of a clear message that was sent in the last administration and is looking to be sent in this coming administration, which is, no more renewable boondoggles, right? So we've started to see hits coming there. And actually, some of that even in the EV sector, as plans were announced to scrap the EV credit. We're going to hear more about that certainly, and that is something, of course, that is starting to weigh on some of those names. So in our model suite, we've seen EV transition model down about 4% this week. Good news is that longer term, and this is pure speculation on my part, but it does seem like nuclear energy and uranium is still something that is on the radar. And although it might not be labeled as a renewable or as something green, it's certainly being treated as an alternative, perhaps to the alternatives. Of course, Russia's announcement that it is going to start to curb uranium exports to the U.S. in response to some of the sanctions that we have put on them with regards to the Ukraine invasion. We will see what the impact of those are, again, for investors. When there's scarcity of supply and demand is constant or rising, that means higher prices. So those producers, those uranium producers, will start to see, profits. So, as we talked about, the incoming Trump administration is starting to have an effect on markets. One of the areas or one of the asset classes he's definitely had an effect on is crypto. And as we wrote earlier in the week, some might claim he's the second coming of Satoshi Nakamoto himself, because we're now looking at Bitcoin trading above $91,000. I don't know if you recall, there was a song a few years ago somebody put out about Doge, which, by the way, Doge also trading like 40 cents or 45 cents or something crazy. How we're going to take Dogecoin to the moon, and there was one line in the song about how, yeah, can you believe that Bitcoin's $30,000? Who the hell knows anything? Well, try 91,000. So there's definitely an impact there. Similarly across other coins, right? Ethereum has also had a good week this week, up about 5%, breaking above 3,100. While sorry. While Bitcoin is certainly at all-time highs, Ethereum is still about 20 or so, 25% away from its all-time high, but certainly it's up about 50% from where it was prior to the election. So, from the crypto space, kind of some good vibes happening there. So all in all, like I said, Markets have been running, crypto's been going crazy. However, we hit a small hiccup yesterday when two things happened. One, PPI came out, it was a little higher than expected, but kind of the big news was Powell coming online and saying, hey, with everything being so good as it is, who really needs to be aggressive about cutting rates? And clearly the market responded today. We had a pretty down day. Let's see, tech was hardest hit outside of small caps, but tech was hardest hit, down about 2.25%. S&P down about 1.3%. Now on the week, you'll see similar numbers, which tells me that a lot of those losses or a lot of those declines came today. So on the week, NASDAQ Composite down 3.15%, S&P down about 2.10%, and the Dow down about 1.25%. Russell down about 5% or so on the week. So, we are starting to see, I don't know if I'd say, the rose coming off the bloom or the honeymoon ending or whatever you want to call it, but in as much as there still are kind of positive vibes about the Trump administration, what he's going to do for business overall, there are some realities that are starting to settle in, right? And we've certainly seen that this past week. Now looking ahead to next week, it's a relatively light week in terms of economic data, so that's okay. I think we're just looking at jobless claims on I believe Thursday, and then we will get a home sales update from October later in the week as well. There are some interesting earnings coming out, and one of the things that we've heard about this past week from economic data is that consumer spending, while still relatively robust, has started to slow down a little. And as you may recall, we talked about earlier in October that there may have been kind of a pull forward effect from the Amazon Day and other online sales events that we saw that may have pulled forward some spending. And that may be the case here, that we are seeing that. Now, of course, we're coming up on Black Friday, and as you've seen, Black Friday isn't just Friday, it's basically those sales are already on now. So, the U.S. consumer is not deterred, but at the same time, we're seeing a little softness there. Now, next week, of course, we're getting earnings from Walmart, from BJ's, from Target, Ross as well, and the Gap. And so we're going to get a lot of color about not only spending habits over the last quarter, but what all these big retailers are seeing going forward. We're going to get a bunch of tech earnings as well, and this time it's kind of a mix of tech, right? So NVIDIA's reporting, we'll see Wix, Palo Alto, and Snowflake. So we're going to get a big mix. We're going to get some semis. We're going to get some cyber. We're going to get some kind of big data, and then of course on the Wix side, more of kind of the retail bent in terms of are people still building websites at a pace that they were, and what kind of activity is Wix seeing. So again, next week we have yet to see kind of what additional news, what additional stories come out of the anticipated Trump administration. And like I said, it's a light week on economics. It's going to be an interesting week on the earnings side. And of course, we're keeping tuned and paying attention to what these companies are saying about the consumer, because as you know, consumer is at least 2/3 of the U.S. economy. So everybody likes to pay attention to that. So that's pretty much it for now. Hope you guys have a great weekend, and we'll see you next time. Bye-bye.